So what are the best AI stocks to buy for 2026? Let's talk through that in the next Wealth and Whiskey video. Welcome to Wealth and Whiskey. I'm Roger Kiger. I've been a financial planner for about 30 years, helping people build their wealth and protect their legacies. So Wealth and Whiskey is called Aged and Unfiltered because that's aged and I'm unfiltered and a little bit aged too. Because I've been doing this for so long, this channel is about discussing things that are sometimes uncomfortable, but they're always things that you want to hear about or you need to know about. But this week, by popular demand, we're going to talk about what I think are some of the best AI stocks to buy for 2026. So first, before I just throw out some stock recommendations, a couple guidelines, if you will. You know, I guess the first thing is, do you think just buying AI stocks is a really good idea? Well, let's put some parameters around that, right? I like AI stocks. I think you can make some money in them, but they're really, really volatile. And I think you should buy the AI stocks around what I call your core portfolio, right? The main positions in your portfolio should be S&P 500 funds or large cap growth and value positions or ETFs that are a little more stable, that don't fluctuate as much, because the goal is to stay invested long term. And if you see a 30% swing in your account value in a year, a lot of people get really nervous, sell those positions out to wait until they come back, and then you've lost that money. So AI stocks are good investments as long as they're a minority or a smaller piece of your portfolio around your core holdings. Because, you know, they're not great if you're just starting out investing, and even though you might make some money over 3, 5, 10 years, the first year or two could be really, really painful, and you don't want to get discouraged, sell them out, and not come back into the market. The other thing about AI, it's just not diversified. So when you see these swings, they're going to be more extreme than they would if you had a more diversified portfolio with the S&P 500, like we were talking about. And as a benchmark, let's use the S&P as a comparison to some of these technology stocks for last year, for example. So, you know, the S&P was down, call it 6% year to date. In 2025, it was up 16%. So, you know, that's a pretty good return. You know, if we hope the stock market gives us 8, 9, 10% per year on average, we get that average by having good years and bad years that come out of it. So if 2025 was a 16% gain, pretty good, right? So it's down 6% this year, and I'm seeing a lot of people be really nervous about that amount of decline, which means when you look at the AI stocks and how much they're down, it's a lot more. So let's jump into 6 or 7, maybe 8 different AI stocks. I'll give you some statistics about them, and then we're going to talk about a few that I like and a few that I'm not crazy about. Everybody knows Nvidia, right? It's the biggest chip maker. In 2025, it was up 33%, which is a great year. I think it was up even more than that in 2024. But from its all-time high, why do we talk about that? Because that's how most consumers, most investors look at their investments. They benchmark it from its all-time high, which out of the gate, I'm going to mention that I think valuing any position from its all-time high or how much money you've lost is the wrong way to look at it, because you haven't lost that money if it's down from its all-time high. The all-time high was probably an artificial value to start with, but it's human nature. Our tendency is to look at how much our accounts are down from their all-time high, because we perceive that that's money that we could have, would have, should have had we sold out at the all-time high, which, by the way, never happens. So, with that being said, Nvidia is down 17%. Pretty big swing considering you made 33% in 2025. It came down 17% from that. So the takeaway could be the net's only 16 or 17% since January of 2025. It's not great, not a bad return. S&P gave you a net of 10 with a whole lot less risk. So let's talk about Broadcom. It did better in 25. It was up almost 48%, and it's down 20% from its all-time high. Now, if you look at Google, otherwise known as Alphabet, it was up 68% in 2025. That's a lot, right? And frankly, it was up more last year. Last year was its year. It didn't do as well in previous years like the Nvidias and the Broadcoms and the Palantirs. But last year it seemed to be hitting its stride. This year it's down, call it 13%. Not bad, but it's down some. Microsoft is a weird story. It was up 15% when all the other stocks were up a lot more. In 2025, the S&P was up more than Microsoft was in that year. And from its all-time high, it's down 30%. So if you own that stock over the last 15 months, you're down 15% net. That's the same. It's trading today for the same price you could have bought it 18 months ago. That's weird. If you can go back in time and buy a stock for the same price as you could buy it 18 months ago, maybe that's okay, right? Amazon. So let's look at a couple stocks that didn't do so well. Amazon in 2025 was basically flat. From its all-time high, it's down 27%. Maybe it's not just an AI company. Maybe it does a lot of other things like sell stuff online. We'll talk about that in a minute, but they're investing a lot of money in AI, but maybe they're not an AI stock like people think they are. So we've talked about Meta. Did we talk about Meta? I don't think we talked about Meta. It's down 27% this year. A lot like, it's down about as much as Microsoft. That's a lot. It only was up 5% in 2025. So you can see these things are all over the place. And if you look at Palantir by itself was up 136% in 2025. From its all-time high, it's down 27%. That's a pretty big drop this year, right? Well, not if you factor in how much it made last year. The net's still really, really good. So out of Nvidia, Broadcom, Google, Microsoft, Amazon, Palantir, and Meta, which ones are my favorites? For a couple different reasons. Let's talk through that. I like Google. I like Alphabet because they're spending so much money on AI that they're starting to put some of the smaller AI companies out of business, or at least make them nervous. There was a strong case when Google announced how much money they were going to put into AI. There's a strong case to see that ChatGPT might struggle going forward because they don't have the money that Google has to invest into AI. So Meta's another one I really like. They too are investing a ton of money into AI, and it's down 27%. So if you can buy a stock that's down 27% from its high, it's probably not a bad time to start buying into that stock, right? Microsoft I like really because it's a little more stable. It didn't make much in 2025, but it's down. It's like going back a year and a half, going back in time and buying it for that price. I think that's a pretty good investment. And then the last one's Palantir. I think with all the turmoil going on around the world, their AI and some of their defense contracting and how they're doing that, I feel like that's going to be in demand for a long time. So because it too is down 27%, not a bad time to buy into some of those. Two of the stocks I'm probably not as crazy about would be Amazon, because as much as they're spending money on AI, they are really a retail stock, right? They're a technology-based retail stock. Why is that bad? Well, it means it's dependent on consumer cycles. The economics and the economy and how that performs. So it's not going to perform as much as the AI stocks by themselves because it does other things. The other stock I'm not crazy about at this point is Nvidia. I think they're kind of the largest. They are the benchmark for AI. But with that being said, I mean, they've made so much money that they're now kind of incenting their buyers or their customers with loans and cash incentives to buy their chips because they have such a strong balance sheet. I don't know, that just feels a little bit weird to me when somebody's giving their own customers money to buy their own stuff. Maybe they should just discount the chips. I don't know, but I'm not in that space. And Broadcom, I think, is fine. It's okay. It did great last year, but it's a competitor with Nvidia, and I think they'll probably do some of the same things because they're right behind Nvidia, trying to follow in those footsteps. So Amazon, Nvidia, and Broadcom are not my favorites, whereas I really like Google, Meta, Microsoft, and Palantir. I like those a lot better because of the reasons we talked about. And, you know, Amazon's another one that, if you look at 2025, let's pick on that for a second. That stock was flat for the year. Throughout the year, that stock had 30% drops in price, and it came back to end the year flat. And now it's down 15% from its all-time high. Those numbers don't make me feel great about it. But hopefully that helps. Remember the things we talked about. Don't have just AI stocks in your portfolio because those 30% swings on stocks that are really good companies. Amazon's a great company. But man, a 30% drop in a stock, if that's a large position in your portfolio, can make anybody a little bit uneasy. So hopefully that puts things in perspective a little bit, right? This stuff takes a lot of time and patience, and man, it's hard to watch these kinds of drops. That's why these are long-term investments. Don't get involved emotionally and try to figure out when to buy in or when to buy out. If it fundamentally makes sense, it might be a good time to buy. So with all that in mind, start your journey by downloading our Legacy Blueprint in the link below. Please like and subscribe to our channel. We don't want you to miss any future episodes. I'm Roger Kiger. Thanks very much for your time, and we'll see you soon. Cheers.